If you need to sell your house before you buy a new one, I'm gonna show you exactly how to do that. Hi, I'm Mark from the Fazzini Group, and we make these videos so that you can make better decisions about buying or selling in the Tampa Bay area. Now, we've been helping clients for over 30 years in the area, and we'd love to help you. If you have any questions on locations, the buying process, selling process, or anything related to Tampa real estate, we'd love to hear from you. Okay, so you wanna buy a house, but you need to sell your house to get the proceeds to go purchase one. This can be a stressful process for people to think about. Now, we have clients that go through this situation all the time, and they do it successfully. Actually, I can think of a client, really nice couple, had a home in Palm Harbor. They wanted to buy a home on the water, and they were just in a typical family-friendly neighborhood in the Palm Harbor area. Very desirable house, but we went to make offers on a new property on the water before they had their house listed, and we made the offers contingent on them selling their home, but it wasn't sold yet. Every time we made the offer, it got denied. So we came up with a plan, and we were able to structure a sale for their home that gave them flexibility and convenience to be able to go make a strong offer on a new home. And as of last month, they're happily in their new home on the water with the boat out back, and they couldn't be happier. So there are a lot of different ways to go about that process. I wanna share with you the best ways and maybe a few things to avoid. So we came up with 6 different scenarios on how you could approach this process. I'll explain those and give you a little bit of insight on what is good about each option, or what's not so good. And I do have a favorite way to approach this process, but everyone's situation is different. So you really need to know what's best for your family, for your situation, before you commit to any type of plan. So one of the best ways to go about this process is to prepare your house for listing it on the market. So you're getting a price opinion, you're coming up with a listing strategy, taking photos, all of that, and you're going to put the house on the market, you're going to accept a contract, and you're going to creatively negotiate the contract terms to set yourself up for a purchase. So the first way, after you do this, you list the house, get it under contract, you're going to try to negotiate a lease-back where you can stay in your current home for, let's say, up to 60 or 90 days after the actual closing, so that you can go make a solid offer on a new property. So what that looks like, let's say you accept an offer today, but you are going to close in 30 days and remain in your home as a tenant technically for up to 90 days as you go look for a home. Now, what that does, that allows you to lock in the sale of your current home, to free up the equity in that home and go make offers without a contingency. So in a competitive market like we have in the Tampa Bay area, it's very hard to get offers accepted with contingencies. In this first scenario, you are making offers free and clear of any contingencies on a home sale, and your offer will be considered as a viable option. Now, an option that people often try to do, but it does not work very well, is you have your house that you want to sell, you get an idea of the value, but you don't put it on the market, don't have a contract on it, and you try to go out there and make offers on new properties contingent on your home selling. Now, you can make these offers, and maybe you're approved to actually get those offers accepted with a home sale, but the listing agent or the seller is going to see that your offer is contingent on your home being sold, and your home is not on the market, not under contract, and they are going to say, no, we don't want that offer, because there's too much risk. If it's not on the market yet, they don't know if your home is even going to sell. Is it going to get through inspections, appraisal, et cetera, et cetera. So unless a property has been sitting on the market a long time and the seller is very motivated, they're probably not going to consider your offer with that home sale contingency. Now, another option, it's kind of like option 1 where you have a lease back in your own home, but in this case, you would be in a situation where you're willing to put your home on the market, get a contract accepted, close on it, and go into a short-term or longer-term rental. This isn't always ideal for everyone, but if you are motivated and you want to be able to free up your equity so you can go make competitive offers, you might say, okay, we're going to accept an offer on our home, we just can't refuse it, and we're going to close in 30 or 60 days. We will look at homes throughout the process, but we'll have a plan to get into a, let's say, 3-month to 12-month rental while we look for our dream home and dream property. And essentially in that case, you're going to have to, of course, sign some sort of lease, and you're going to have to either make sure your furniture fits in the temporary place, or you're gonna probably have to put your furniture and a lot of your stuff in temporary storage. This option is not always ideal for folks, but if you've wanted to travel, or you've wanted to go rent a place on the beach and try it out, this could be a viable option. The key here is that you are listing and selling your home, freeing up the money, and getting into a rental when you're going to start looking and making offers. Okay, another option is to find some sort of creative financing. There are bridge loans you've probably heard of, where you can leverage the equity you have in the home, free that up without selling, and go make an offer on something. So you could take the money out of your home in some way. There are a lot of companies out there that have seen a big need in the market for this. So they will offer for a small fee between 1% and 2% of the home sale price. They'll offer essentially the ability to open up that equity and allow you to go make a purchase before you sell. Now, there's many different options for this. We have 2 or 3 companies that we have worked with and had great success with our clients, and each one has different restrictions or requirements. But if you would like to know about those companies, reach out to us. We'd be happy to share them with you. Now, how those programs typically work, they are going to pre-approve you just like a mortgage lender would. So they want to know all of your financial information, like a mortgage company. Once they pre-approve you, they're going to say you can take X amount of dollars and go buy a new home, and they'll either give you the cash for that, or they'll give you a mortgage for that. And then they'll have some sort of convenience on your sale where they'll say, okay, we'll allow you to go make that offer, and then we will take care of your current mortgage payments for up to 60 days. And then essentially they'll give you some sort of deadline to be able to sell your home, so that you don't have 2 payments and you're paying them back essentially out of your home sale. And then the fee for that, the 1 or 2%, is essentially off the sale price of your home. So if you're selling your home for $500,000 and you're going to pay them 2% or $10,000 for that convenience fee, it could be worth it. And it could be a situation where you're able to still get your dream home before you sell and before you have to get into any type of temporary housing situation. Okay, another creative option is to borrow against other assets. So you can do some sort of bridge loan to get money out of your current house. Well, you can also get money out of other types of assets. So you might have a business with a really strong track record. You could have gold or diamonds. You could have other properties out there, or you could have a stock portfolio that you could lend against essentially. So that is going to be dictated by the bank that you're with and how they are willing to allow you to borrow against different assets. We've had many clients that have had, let's say, 2 to 5 million in a stock portfolio, and their wealth management advisor, they have a product that they can borrow against that money without selling the stock. There's different creative ways to do that. It just depends on the financial institutions that you work with and the different types of assets that you do have, because people will get creative with all of that. And the idea with that is, if you are borrowing against assets, after you are able to take the money and go buy the home you want, you could sell your current home, and then you could pay that loan off and essentially, get back to where you were. And that really just removes the pressure to make everything happen at the same moment, because it can be stressful to try to navigate all the different pieces of buying and selling at the same time. So these creative options are pretty good. All right, another option is to just get 2 mortgages. So if you have your current mortgage, you might be able to qualify for another mortgage even without selling your current house. So a lot of people don't want to have 2 mortgage payments. I get that. But if you can qualify to make an offer without the contingency of your home sale, that at least allows you to make a strong offer that a seller is more likely to accept. Even if you do intend to sell your house and make the timing happen perfect, you now can make an offer, and then your worst case scenario is that you don't sell your house quick enough and you have maybe a few months of 2 mortgage payments, which isn't ideal, but that is all about just fine-tuning that plan so that doesn't happen. And in that case, you might be making an offer on a house and maybe structuring the closing date to be 60 days or a little bit longer out, so that if you really didn't want the 2 mortgage payments, as soon as you get that offer accepted, you can move forward to list your house. And essentially, once you're through contingencies on the purchase and you know it's happening, you can commit to an offer on your home, and you could try to make the timing work out really well. And that takes us to our last option, where the timing is just perfect and it works out really well. So the last option would be, you are listing your home and you're getting it under contract with maybe a 60 or 70-day closing date, and you're going to perfectly time the purchase so that you can close simultaneously on each. And we've had many clients have success with this process. It does take very strategic planning. However, you're essentially getting your home listed on the market. You probably have a really good idea of what you want to buy, what neighborhood, maybe there's a house you have in mind. You're listing your house, getting it under contract quickly. You're doing like a 60-day or maybe a 90-day closing, and then you are going to make an offer on the next house contingent on your sale. But the key there is, if you can make it contingent on your sale that's already under contract, maybe you're already through inspections, the seller on the other end is gonna be much more apt to take your offer because there's less risk. In any of these scenarios, you have to have a good team on your side to help with all of this planning. If you have a really good agent that has a lot of experience and knows each sides of the market, they're going to be able to set good expectations and set a good plan up, and also really make a case for you to get your offer accepted with a contingency, because the other side will know they're working with a top agent with experience and a great track record to get the actual closing done. And there are creative ways to protect yourself through this process. Like for instance, I've had a lot of clients where they don't want to list their home and accept an offer if they don't know where they're going. So I've had clients in the past where they list their home, they accept an offer contingent on them buying a certain property. So there's no risk. If they don't buy the property that they want, they don't have to sell it to the buyer that they've accepted the offer from. And that doesn't always happen. Not every buyer will accept those terms, but it's just one creative way to protect yourself in the process. Okay, so if you've watched this video to the end, we want to hear from you. If you have any questions about buying or selling in the Tampa Bay area, or about the overall process, how's the market, etc., call the number below. Please reach out to our team. We'd love to help.